Welcome one and all. Let's look at the trade recap for 24th February 2020. The Friday being a long holiday and the fact that we had a crash in the SPX. So it was expected to have a gap down. As exciting as it is to have a prospect of a trend day happening, the kind of the large gap ups or gap downs wherein we have say 0.5 to 0.6 percentage of daily ATR in the gap itself, these are the kinds of opens traded spread. In fact, I personally load these kind of opens wherein 20, 30 points or for that matter even 50 points come and go in an instant. And if you're not careful to not short in the hole, you would burn up your account quickly. So this is an experience that market profile has changed my perspective. Previously I used to chase the price and I used to more often than not get short in the hole like many of the retailers. So this was an open wherein we had to exercise patience despite the price making it all too obvious, and kind of it tempts us to think that it is easy money that is there for the taking, which in fact it is not. More often than not, to trade into a trend, it is important to wait out till at least the first 1.5 hours to see whether this kind of gap is warranted or unwarranted. So if we do not close the gap by 11:30 a.m., more often than not, the trend persists, and we do close in the direction of the gap. With this in mind, my first half of the day included a couple of shots right at the open with nothing much home to write about. One yielded some good profit, and the other trade ate half of the unrealized profits. So at this juncture, I was waiting for more nuances or more clarity in the auction, uh, and was mostly on the sidelines. After the large A period imbalance, the price seemed to found balance, and with B and C periods making a series of inside bars, with each period making an inside bar of the previous period. At this juncture, I also noted that the lows were stacked and the highs were also kind of overlapping. So it could be a kind of a VP day if we are not careful. Nevertheless, given that even well into the D period, since we are accepting into the gap with no meaningful upside, my my bias for the day or my reading of the auction was that the price could try to scale developing value area high, which was about 11,945 to 950 thereabouts, which was also kind of having the matching highs and stuff. So any spike to that area, I was thinking that it would be a good position to enter into shorts or to get into the direction of the established trend. Like I said a bit earlier, these were the matching highs and lows which were too closely stacked on each other. So it was a sign of some kind of short-term players shorting at identical highs or be at identical lows. So the thing with these nuances are they tend to get cleared most of the time, and you could you could not try and take contra trades. Rather, when one of the weaker nuances on the upside gets broken, you could use that as an entry point to enter into the trend, because these are more often than not shakeout moves that come before going inside the trend direction. The nuances visible at this juncture were a series of stacked lows at approximately 11,920 levels, which was also a previous week low. And when we have more than one low, two lows, these kind of become exponential lows, which would most likely be taken out. But then again, we also had those highs which were also getting mechanically rejected as and when the price is attempting to scale above 940 levels. So the players who placed these stops there got shaken out on a spike to 11,955, 960 levels. This was where I positioned my entries initially with 12,000 PE longs, and I also scaled out these and re-entered them in 11,950 PEs on this spike up. There was also one other nuance that was noted by me on the spike up to 11,960 levels. The price has spiked to 11,960 in the F period, wherein the low of the F period was at 11,935, which happened to be the previous period's halfback level, which was also signs of short-term players playing the game. With the kind of the cluster lows of at 11,920, and with also a halfback reference, which is also a sign of weaker reference that took position against the established trend direction. It yielded me more conviction into holding my shots despite price taking some time and balancing above the developing value area high. The thing with day trading is, no matter how much clear your thinking is, you would always second guess yourself. At least that is the case with me. And in hindsight, everything looks too easy and too obvious, which is not always clear during the day or as and when the option is developing. At this juncture, even I was beginning to have second thoughts as to find a better location, thinking the upside probe may not be over, or the market condition has changed to the initial gap up. But nevertheless, I have maintained a stop of day high being taken out in Nifty. The seeds of this doubt were also caused by Bank Nifty's price action, which also made a new day high at this point. So it's either Nifty going in accordance with Bank Nifty or Bank Nifty coming down in sync with Nifty. But the nuances on the downside were far too tempting, and also given that we have come from a 5 TPO balance or acceptance on this gap, I I had a stop loss of 11,970, 980 as invalidation for these shorts, and was holding them patiently as the price was finding some balance above the developing value area high. Once the one time framing was broken though, I was confident that the price should come down and take out the 11,920 level, wherein many stops were being placed, and it will likely act as a spike zone. The price eventually came down and it has taken the halfback from where the spike has started. In the process, it also made a new low at about 11,920 to 922, which also which was already a weaker reference and was not likely to sustain. So at this point, I I exited my 12,000 Ps and I added 11,950 Ps to take advantage of whatever is the spike zone that is to occur once the 11,920 breaks. But given that we had 9 TPO balance or the developing block being 9 TPO wide, I wasn't having a too bearish view. I just thought it's either the 11,920 may get taken out in a spike or the day low might get taken out, but my my bias for the day was we will close in the middle of the day given we had a wide acceptance or wide TPO 9 TPO wide point of control. So I was also in healthy profits by this time. So given with this view, I went neutral at about 1:30 p.m. wherein my trades got concluded, and I I was out of the trades. as the price has made a new day low, and once it was balancing at 11,880 levels, which also happened to be a poor low, I was so tempted to take a continuation shot. But having exited my all my puts at 11,920 levels, I did not have the courage to take any further shots because I felt it was already an extended move, and since I was not disciplined enough to carry my shots by way of trailing it, I did not deserve to take any further continuation shots and risk my open P&L. And you know, I did close out the day with the trades that were concluded at 1:30. So this was how my day panned out, and hoping you had gained some insights as to how I see the market from market profile perspective. Thank you for watching.